It's the weekly 30-30 trading list on the ASX. We're looking at the 30 strongest momentum companies over the last quarter. And this week's 30 best launchpad stocks. They're the companies that are set up and poised to join these momentum companies in the near future, we hope. Gary Glover has been through the two lists, picked out the best charts, and now he's going to analyse them for us. Good morning, Gary. How are you?
Yeah, I'm great, Chris.
So how's the list look this week?
Yeah, just saying we got some, obviously we've got some biotech there, which we've been following obviously the last month there, and obviously the lithium stocks as well, sort of pretty firm in the quarterly one there. Obviously they hit the launch pad there, I guess a month ago, I think, where the biotech probably hit the launch pad there maybe 6 to 8 weeks ago. So just, yeah, there's obviously a few others in the list as well, but those are the sort of two sectors which seem to be a bit heavily weighted. Definitely, like you, surprised by number one. Don't often see a fund manager, I guess, like a sort of more broad-based investment sort of style, basically be the number one stock there for quarterly there. So WAM Global is pretty interesting, the fact that it's up here. It's probably not one I normally trade here, but it is probably one that I actually have circled, just because this might be sort of something I might look at later in the year. So I think if you think the US market has sort of bottomed there, or global equities have bottomed, this might be one to have a look at when that time comes here. So if we do get a retest in October, probably one to put on that list there. But yeah, a bit of a surprise in here. Pretty light volume through here. The only noticeable thing here was we did see a bit of volume around those sort of lows there. But really, it's a pretty hard downtrend there. There would have been, I mean, this was probably the first time we broke above a swing high in here, but not too many sort of, not too many great signals in there. I usually like to sort of want to see a couple of high lows in there first. So maybe up around here might have been your first level, but probably not one that I normally would trade in terms of, come to mind for momentum sort of stocks here. So the other ones in there, Leo Lithium was number two, obviously pretty new stock there, so a bit hard to sort of judge that one. I think Cadence Capital was number three. Again, not much of a move in there. SYA, interesting, was number four in there. Obviously, that's had a bit of a pop here. Probably not one I'd look at there, Chris. Just look at the, very light volumes in here as well. Bit of a risky sort of stock here. Obviously, this was a bit of a star. I think sort of clothing brands in there, and then it's had a really deep correction there as well on a weekly. So I think that the daily doesn't sort of give it justice there. Look at that! Wow, that decline there. Yeah, so 480 down to 40. So that's that's 90% plus here. So there's your 80-50 rule up beyond the 8. So I mean, I guess it's gone above the 50-day moving average there, but volumes hardly constructive there. So it's not a stock that I would be looking at. Liontown obviously is a bit more quality. It's obviously one of those lithium stocks there. So this had a sort of deep test in there. Probably didn't really, did get a new high up here. Maybe, might have been looking around here possibly, but still pretty light volumes in there. No sort of dead giveaways in there. Really just sort of bit of a relief rally there. It sort of had a decent move here. Now you're starting to see a bit of volumes. I don't like to sort of see light volume moves here all the way up and then volume come in after it's popped here. So just be a little cautious with that sector there myself. Polynova is sort of one that I think we've covered it every week here for probably the last 6 weeks probably, just because it's been on our launch pad and into the it's been sort of up there in the core momentum stocks there, and we took that thing up, just the depth here, so much strength here. So look at this. I mean, you've sort of your high low in here. I mean, this was a good signal in there. This is sort of what drew me in, sort of going into a new high here after the good volumes there. So that's sort of what sort of triggered my sort of buy in there, and a bit of a consolidation as well, sitting on the whole thing just sort of sat on top of the previous peak as well. So that was a pretty good sign there. Bit of a thrust up, bit of a retest here of the 50-day moving average. So look at this, it's had a few tests of the 50. So this was probably, this was a little bit of a worry here, because obviously there was a bit of volume in there, but a lot of stocks were doing this, thrusting down after a good run. cooling off and then just going again. So but yeah, it's obviously we've gone for a bit of a run here now, so still pretty strong, but yeah, probably for me a bit late to be coming in. I've sort of I've got out a bit early here. Didn't really, yeah, been a good trade for me, but I definitely could have traded that one a lot better. Didn't get a chance to really add to it like some of the others there. So yeah, there's a few miners there: SYA, SYA Mining, Lake Resources, Ioneer. So some of these sort of smaller miners there have had sort of pops here. Again, we're sort of popped and then volume sort of coming in late here. Like Resources there, which is obviously a bit more speculative there, had a pretty good pop here. But again, you know, so some of that volume's coming in late here, so I'll be nervous about that. This risk the stock's a little risky for mind here. Ones that sort of I liked previously was sort of 360, just because it's sort of got some good volume down the low, bit of a congestion there. I think this sort of broke out of a bit of a, you know, descending wedge and just started to build here. We had our, you know, our sort of high low, sort of our 0, 1, 2, 3. And it's just sort of each pullback so far has just been consolidation. Even this little down day there, well, there's no volume in there, and we're sort of popping up here. So yeah, just prefer to see it a bit more constructive. TLX has been pretty firm. Bit of a worry today here, the fact that we've gapped down big volume so far. But yeah, probably looking a little stretched. P&I sort of something more on the quality side there. You know, it's okay here. I've had a sort of, you know, probably had our 0, 1, 2, 3 here. I think probably the only thing I sort of saw in here was that after sort of getting too high lows, we had a bit of a pop there, and then we just drifted sideways. So there's all this consolidation there, just really just sort of sat on top of that previous move there. Didn't, you know, that's if that's it sort of trying to sell off there. You know, it's like David, what's his name? David Ryan there sort of talks about, you know, these sort of sideways moves there, struggling to go down, and then you sort of pop up here. So that's probably the only, you know, that I think that's sort of constructive price actions. That's sort of something to look for there. If you sort of get your sort of second, sort of third high lows, particularly sort of congestion there. I think 360 did the same. Just a really good pattern to sort of look for there.
Is that congestion, what, 8 inside days, is it?
So what do we got there? So we got, that's, you know, 1, 2, 3, like 1, 2, 3, 4, 5, 6, 7, 8. Yeah. So just using up a bit of time. It's even like something like 3 or 4 days. When oftentimes I'd look how many days you go up there. So that's sort of, I'd be my first, you know, 1, 2, 3, 4, 5 days up. I'll call this probably an inside day. So I'd say 6. And then we're down 1, 2, 3, 4, 5, 6. So 6 up, 6 down, can't go down. That's the way the McLaren used to sort of count them. Yeah, that leaves it in a pretty strong position there. So yeah, so that's that obviously interesting there. I think CXO has had a nice pop here as well. Again, another sort of lithium stock there. There's quite a few on the list there. So again, they've had a pretty decent rally here, but you know, it's hard, not like sort of the, you know, the biotech's had a lot of volume come in. It's not a lot of volume coming in here. The volume sort of come in, only started to come in late here, which always worries me when I see volume come in after the move. You know, like they say volume comes in at 1 or 2 places, sort of, you know, is it a sign of distribution or accumulation? So normally you like to see the big volume come in at the low and build and then pop up there. I was watching a David Ryan video yesterday and was talking about the inflation period, like the 70s. I think it was around 82 was the end of the inflation period. The sort of rate started to sort of cool off there, but you just saw on the equities market, I think it was 1982. We just saw this massive volume started to come in across all the indices, and that was the start of the bull market. Was just all of a sudden, it was just massive. You know, it's just finally, you know, the market was going through this sideways range for like a decade almost, and then you just saw this massive volume come in. I think it was around 82, and that was just the start of a major bull phase. But the market was the volumes were so obvious, so that's why they're sort of important there. RBL was sort of one that I noticed there. Again, probably higher risk on the risk curve here. Was sort of got our sort of a low in here, bit of a higher low, second high low, or third high low. So sort of started to get a retest there. It's all sort of stayed nice and tight in here, probably breaking above that little, first lower high in there. That might have been a bit of a trigger there. As it went up, sat back down again. So slightly higher volumes on the up days here, but not startling. So I mean, when I was sort of looking for some opportunities there, things that already run, I did notice this one here, but luckily for me, I probably I did like a look at this there, but I'm pretty much out of capital really. So it's probably a bit risky for me as well, to be honest. Yeah, but yeah, that does look constructive. But again, there's no volume in this here, so that usually means we just have a move without having a great move. So you want to see better volume there. Points better sort of constructive there, sort of building, a few higher lows in there. So it's because it's had such a deep retracement there. It looks like small moves here, but we're talking about gone from 2 to 4. So I mean, I think I actually did trade this one here, and I built up a bit of a position there. I remember one, from that, I'll be honest here, I probably, but I went from being up 9 grand to being up 900 in half an hour on that position.
9 grand to $900.
900, yeah. I mean, I was running my stops sort of back in here. I saw this little tight little phase in here. I think I bought the little breakout, I think, in here. And I added to it on this congestion. So I added to my position. I like the look of it. And then it popped. It was looking pretty good. Opened, you think, oh, yeah, wow, look at that. And then it had come back down to, I think it had a bit of a bounce in there. So I'm a bit of a wimp. If I, for me, it's all about capital preservation. So I think we got a little bit of a bounce to 330. So I just cut my position straight in half. And then I just put my stop in it. I think above break even for the rest of it. So I ended up breaking even on my one parcel, and I took a small profit on the other parcel. But yeah, after considering how much it was up, but you got to leave yourself a bit of room. But but unfortunately for me, it was all happening within half an hour. This thing it was up here and then it was down here. So I didn't even really get a chance to sort of move my stop up there really. But you do get a chance in today sometimes. So it's just all about risk management. So you just got to I think in the end I might have made a small profit on the whole net position there. But to be honest, I was just glad I didn't get out losing my shirt. So it's more important to sort of preserve your capital, I think, there. And but we're seeing these sort of moves. We're seeing there's quite a lot of these small stocks are moving here. So you got to be alert to it there. I definitely review my stops a lot more regularly than I probably would. Like I sort of write them down, work out the levels, work out how much capital I've got at risk every day. And then if as long as if I'm comfortable with the risk I've got on the table, then I'm just comfortable trading. If I'm uncomfortable with my risk on the table, then I try and tighten my stops up a bit. And a Select one that's had a bit of a move here again. There's no sort of volume sort of in there as well. It's pretty light here. So the sector's been in play, obviously. Biotech, healthcare has been positive, but pretty light in there. I think Big Tin Can Holdings is sort of one that sort of had a bit of an upgrade on here. So it's obviously the share price has sort of managed to sort of go on. Bit of volume coming in here, but still pretty light here. So some good fundamentals sort of positive in there. But I guess the only thing here is you do have your sort of 0, maybe your 1, 2, 3, or maybe this is your 0, 1, 2, 3, depending on how you count it. But we that's a good sign there, sort of coming back, sitting on top of that previous high and starting to go here. And that was, look at that volume there, so light in there. So even some of the smaller ones here, just look at your volumes. I think it's a real technician sort of market here at the moment. So Stan Weinstein basically was talking about charts and stuff there, and I think what's his phrase there is sort of so it's okay for some people to look at charts and others just look at fundamentals, because us chartists want to sell our stock, our losing stocks, to the fundamentalists, so, which I quite like. So yeah, we don't want to be in stocks if they sort of swing the wrong way. We want to be sort of out of them there. So on your launch pad there, obviously Lake Resources is number 1. That's obviously the biggest mover for the week. that looks pretty obvious there.
Yeah.
Big volume, a little bit distribution orientated to me, so probably a little too risky for me, this one. AIS was number 2. Had a little VCP in here, sort of just a little pullback and a little pullback again, and then a little went through it there. Had some, maybe slightly improved volume through the, once we sort of broke above here, but it's pretty hard to trade these sort of 4 or 5 cent stocks there. But look at the volume there, no volume through as well. So although we got a little VCP in there, a little break there, it's not, I'd hardly call it one of the best signals there. NVX was probably one that was more interesting to me, just because this was obviously starting to see a few in the lithium. And this has had a pretty massive decline. This is probably one that got one of the most varieties in that big lithium move, and then it's had one of the biggest corrections as well. So, but yeah, started to build a little bit here. Some okay volumes in here, but yeah, sort of interesting there. We're still seeing a bit of volume on both ways here. So volume up and volume down here. So still a bit of a tug of war in there. Considering some of the other lithium moves, how strong they've been, this is definitely not one of the strong ones. So as we know, Chris, we don't want to trade the weaker stocks in the sector. We want to trade the leaders, the ones that are the strongest. So history tells us they remain the strongest. And yeah, Hello World was actually one that I thought was pretty interesting there. Again, that's sort of, here's a sort of VCP, sort of, had a bit of a test of the low, come back. I think we, slightly higher, then slightly higher again, and slightly higher again. So we've sort of got our 0, 1, 2, 3 pattern here. And then breaking above this little VCP in here would have been interesting there. That was the first day, had a bit of volume, so definitely that sort of travel sort of recovery sector there. So yeah, kind of interesting here.
That'd be hard to trade with how fast it got through it.
Yeah, a bit hard to trade there, a bit sort of a smaller one as well. I wouldn't have traded this there just for the reason that I'm already long a few stocks. I'm sort of I was long some Flight Centre and some Air New Zealand. So there's a few stocks in that sector that I've been playing. So I just I wouldn't have added to that just because I would have been coming into too many in that same sector there, which I don't like to do. But yeah, it's not a bad little signal there. That would have been your first little trigger there. But the volumes are still pretty light here. So, but you're not the worst there. I think we're seen there with Air New Zealand actually, which is actually next on the list there, has had a little bit of pop as well. So had a low, high, low, second high, low, all this sideways shimmy in there. This is really like a sideways, all this sort of congestion here, nice and tight, and just starting to break out here. So I think it was once it sort of broke above here, might have been around about 58.5, something like that. It's pretty constructive there. Sometimes you can see these sort of flats. You sort of got to go through look at the half hourly chart there. So I think once we break above here, 58 or something, I thought it was a pretty good sign there. So
didn't look back, did it?
Well, it's moved up here. I guess each cent is sort of a decent percentage there. But I'd love to see. I would have thought this would have got going here. There's some better volume days in there. But yeah, it's still I still think this has got a long way to go here. But would have loved to have seen this really, release and get going there, because that's a big consolidation there. So normally sort of when you consolidate for that long, you pop, you normally sort of get going. So it's been probably a little disappointing actually, if I'm honest there. The other one I saw was Pure Hydrogen Group. So it's had a bit of a pop there, a little bit of a VCP in there, and then pop out of there. I think this sort of coincided with Biden's Inflationry Act. I was basically going to put more money into renewables and hydrogen and things like that. That was out probably about 3 or 4 days ago. So I saw a few of the hydrogen stocks having a bit of a pop, but then they've all sort of cooled off again as well. There wasn't. I did see that bill. I thought maybe. I think the other one was Hazer might move as well, but they've just had little pops and then just consolidated. They haven't really got going. So, so nothing too much in there. Coronado sort of had a bit of a pop. Not bad volume, actually. It's interesting because all the other coal stocks have sort of remained pretty firm. So a little false breakdown here. So that's kind of interesting. Went to a new low, didn't hold it there, which I love the little false breaks. And then we got actually got a bit of volume here, probably on this day here, was would have been like, oh, okay, this is pretty interesting. Got a false break and some good volume coming in, and then we've gone up here. So yeah, it's definitely one to keep an eye on there. AX1 was on the weekly list. Yeah, sort of building here. Volumes are okay without being brilliant, but broken by the 50-day moving average, had a couple of retouches of that and sort of get going again, but volumes are still pretty light. ARV, TMS Resources, that's had a bit of a pop on volume there, so you probably want to just sort of see that consolidate, but again, it's very risky, sort of on that, 4 or 5 cent sort of stock here. CWP's on their list. This is one that I would not touch there. Just look at the volumes in there. So we sort of saw the basically exhaustion of the sellers into the low here. And then we've seen, although we've seen a number of high lows, a bit of a building here, no commitment at all from our traders. This is just this is one that I would avoid on that basis. They're just not seeing any commitment.
Is there a 0, 1, 2, 3 in that?
Yeah, there is in there. Yeah, there is in there. That's why
just not supported with the volume.
Yeah, so you just got to basically, you want to sort of see the ones that have the bigger. I mean, this is my opinion, and this is 20 years of wisdom here coming through. Is that the light volume moves are the ones that, from my experience, they typically don't have the follow through. Don't have, as a trader here, we want to get the stocks that have a bit of follow through and a bit of gusto. I mean, Polynovo is a classic there. I mean, look at the volume down there on that move, strong. We pulled back here, or volume dried up here, and then we saw what volume come back in again, bang, big volume, pulled back, low volume, rallied, big volume, pulled back, low volume, rallied again, big volume, pulled back, light volume, rallied again, high volume, pulled back, low volume. Sort of that's what we want to see. That's when you get the moves that pop here. When you see the you get get a few higher lows in here above the 50 maybe average. Looks pretty good. Looks like it's sort of building. Maybe you get going, sideways consolidation here. From my experience, this is when you don't see any volume come in, you don't get the sort of bigger moves happening there. So as traders there, we want to catch the bigger moves. So if we don't see big volume sort of signs of what I call accumulation taking place, then we don't, they're not ones we want to trade. We want to be looking for the strongest stocks, strongest volumes, ones that have follow through. So that's what we're looking for there. Corporate trustee is on the list there again. So a few travel stocks sneaking in here, which is sort of interesting. Yeah, and that's our launch pad too, which is so obviously travel's had a few up and downs. It's had a few starts there. Some people would sort of say that travel has underperformed here, but and hasn't really gone anywhere. But we've seen some massive rallies, pops. So if you can catch these rallies in these travel stocks, there has been some good rallies already here. It's just if you held on and wait for it all to come back, you'd be back to where you started from, and then it's rallied again and come back again, rallied again, come back. So there's some of the pops have been pretty decent. So it has been a sector that has had some decent moves in it. So, but yeah, so we're just starting to see a bit of a, but it's a bit messy here, but there's some okay volume in here. But we know it's a stock, I guess, a sector which is probably I think the sector which is sort of on the playing the long game on the recovery, but it might just have a few up and downs, big sideways sort of move there. But sometimes those low growth markets like the 70s and the 40s, they might stand still over time, but the volatility within the standing still over time is really high. So I think I'm trying to think which one it was now, but the 40s and 70s there, I think some of the indexes had like 70% rallies off the lows and 40% retracements off the highs. And they had like 3 or 4 of them over like 8 years. So big moves. So I mean, you're talking about 70% rallies and 40% drops, having like 3 of them over like 6 or 8 years is like that's tradable. You can still make pretty good money there. So so the low growth, everyone thinks that the low growth markets are actually more volatile than, so yeah, you just need to know how to trade them there. So if inflation's here to stay and we're going to be basically trading a big sideways move, you still might find we get big moves up and down, big moves up and down. That still could be could this be a trader's paradise for the next 6 to 8 years? So, obviously going straight up like a bull market, like the last the prior 10, 11 years. That's the easiest way. That's all. I guess that makes it easy if you're just on the long side there. But sometimes these low growth markets can give you more volatility, so they can be just as much fun here. So whichever way, I think that there should be some great trading opportunities coming here. Fletcher was the last one on the list for the launch pad there. It's constructive there, but not really had much of a move. It's more of a flat sort of move here. So it's building here, but yeah, maybe sort of slow and steady here. So again, maybe a bit like the retail sector, probably got a bit oversold. The builders here probably, just probably one to be interesting, just to keep an eye on this sector there, because everyone's sort of thinking that interest rates moving up, it's going to be a dampener for that sector. I thought the same thing for discretionary spend as well. So just keep an eye on that. But that's our list there. So there's a few opportunities there, but I think we've definitely had a few decent pops in there. There's quite a few sectors that are probably showing some light volume as well. So that's probably a bit of be a bit cautious with some of our stocks. So we just want to be trading the ones that are building, but building on some strong volume.
Nice. Well, they're good insights to take, and I like the trader's paradise, because if it is going to be bad for portfolios over, say, the longer term, like you said, in the 70s and 40s, the net return on the portfolios might not be that great. The dividends did the heavy lifting, but with 70% gains and 40% losses, as you said, there's a lot of great opportunities that can be found in those kind of markets.
Yeah, no, that's right. I mean, if you look at that sort of, I think I showed a slide there for a couple of months ago about the 70s. I think, the energy was number one sector. I think second was actually precious metals, which is interesting. And then third was sort of value stocks. And I think fourth was like the high dividend paying stocks was sort of like the best performing sector. So you're getting a bit of a mix in there. So, but what we saw in there, if you look under the hood a little deeper, that's you saw volatility. So you saw some of those sectors had like energy had some 100 and some 200% years, and then had some down years as well. So it was down 35%. Can't just be long energy for the whole 8 years. There's going to be some big moves in there, and even the precious metals, some big up and some big downs, and even sort of some of the markets as well. Probably more so in the value and the high dividend shares, but there was some volatility in there as well, some bigger years and some less years, but on average those are the best places to be. So that should give us some guide.
Well, like you said with Stan Weinstein, his book, a great book with his brilliant hairstyle on the front, Profiting in Bull and Bear Markets, when he goes through the 70s, he talks about a bull market lasting for 7 months and a bear market lasting for 4 months. And it's exactly that. The 70s it was seesaw up and down. And so you're looking at that as a similar environment with the high inflation and sort of.
It could be. That's the risk for equities here, is that inflation hangs around here. So everyone thinks inflation's peaked here. That's obviously why we've rallied here the last few days. I mean, getting a inflation print of 8.5 versus 8.7 or 8.8 expectations. So everyone's like, oh, inflation's peaked. But 8.5 is still relatively high. And if anyone's watched any of Stanley Druckenmiller sort of stuff there, he speaks about, he's been in the market for 30 years, but he literally basically says, unless the Fed gets rates above the inflation rate, they don't come back. So he was sort of saying that historically, the central banks have to get, over in front of, you have to get over it, yeah. And there's a few charts actually floating around, sort of showing sort of similar. So, I mean, we're still so far away from it. So, so that's the concern, is you don't get the rates high enough here and get on top of it, keep it lid on it. It may not get under control here. So, I mean, the Fed's done everything, everything they said they were going to try and do, and everything they promised hasn't come to fruition. So we should not be believing the Fed here. I mean, history said that they're wrong a lot of the time anyway. But I mean, most recently,
that's why we're having the RBA review, right?
They've been wrong. I mean, the RBA's been terrible as well. So, yeah, I mean, it's like, I mean, as traders here, we're trading odds, so we're trading patterns, and we're trading. There's no probabilities. We're only sort of, there's no certainty. There's only probabilities. So we're just trading patterns, which we historically, have got, better odds on. Sort of these patterns there. They've got a history of breaking up. There's no certainties there. I mean, we're going to be losing some. We're going to win more. Hopefully, those patterns basically win more than they lose. That's the whole ideology behind them there. I mean, the history of central banks printing a lot of money is that 90% of the time you print that sort of, you print large dollars, you get inflation 9 times out of 10. Yet central banks were betting on the 10%. That never made sense to me as to how we weren't going to get inflation there. Where in the past only 10% of the time. So, I mean, we're still betting now that inflation's peaked here and it's gone. So, I hope it is. I hope they're right. But historically, the numbers. I'm a numbers guy, Chris, and I went back and looked at the history of them myself. I watched the sort of Stanley Druckenmiller video, and he was sort of saying 100% of the time you don't get a front. So I went and had a look myself, and went through some historical data sets there. And at least 2/3 of the time, when interest rates got over 5, or sorry, inflation got over 5%. I think it stayed there for longer than 2/3 of the time it stayed over 5% for at least 3 years. Sometimes it stayed there for longer. So, regardless of what the Fed and stuff does here, it's not the odds aren't in our favour. So that's the way I look at it. There as a history is sort of I mean, and the ones that they have got it down is when they've got the Fed rate up there really quick on top of inflation to push it back down again. So there's no way the Fed's going to 8% rates. There's no way the RBA is going to 5 or 6% rates here in the next few months.
No. Most
so they're going to be higher.
The country's homeowners will be out.
So they're hoping they're going to do something a little different. You're hoping that everything's going to work a little different this time. I know this is a bit of a unique opportunity, but I'm just a numbers guy. The numbers, historically, the numbers aren't in our favour. So we should be a little guarded here about what's ahead. So for me personally, it's not. I don't see anything to worry about too much. It obviously has some perspective on your investments there, but as traders there, we just trade what's in front of us. But bigger picture there does sort of, you just got to have that in mind as to what sort of environment you might be in, and that might dictate how you trade as well. So, if we think, if inflation does sort of subside, really starts to cool off, then maybe we can open our shoulders a lot more as traders and aim for bigger profits. If inflation doesn't sort of cool off as much, much as we hope, and it does stay at elevated levels, then we know our market's maybe going to be in more of a sideways grind. So therefore, as traders, we got to adjust our outcomes and our targets as well. So that's the only difference we might make is an outlook on our position size and our stops there. We're still going to be plenty of trading opportunities. There's still going to be plenty of volatility. That's what you don't want to have as a trader, is to have a dull market with no volatility. So I don't think we're going to have that. We're other,
We had that once. I remember we were doing our weekly interviews, and it was 8 weeks straight. Nowhere.
Yeah. So the good news is I don't think that environment's going to happen. We're going to be a dull market. I think we're either going to be a high inflation market, which means we're going to go up and down in a volatile manner but stand still over time, or if we do get over the top of inflation here, inflation cools off, then I think the markets can go again and go through another bullish phase. So, I do think from a trading perspective, I think those, the odds favour those two. I'm just not sure which one of those two is going to be the outcome there. But from a trading perspective, both of those are good outcomes.
Well, like you said, we've got to trade what's in front of us, and the best way to do that is keep turning these lists over, looking at them, finding the best trade. So that's, I guess that's what we do. And to wrap that, there's a link to these consistent playlists, so you can click on that on the right. And you mentioned volatility contraction patterns as some of these charts are picked up, and that's also on the right. I drill down on the tutorials of how that pattern works. So thank you again, Gary Glover from Novus Capital.
Thanks, Chris.